Ladies and gentlemen, good day and welcome to MSTC Limited Q3FY22 Earnings Conference Call for Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dipesh Kashyap from Equirus Securities. Thank you, and over to you, sir.
Yeah, thank you, Lizanne. Good afternoon, everyone. On behalf of Equirus Securities, I welcome you all to 3QFY22 Earnings Conference Call of MSTC Limited. From the management, we have with us Mr. Surendra Kumar Gupta, Chairman and Managing Director, Ms. Bhanu Kumar, Director Commercial, Mr. Subrata Sarkar, Director Finance, and Mr. Ajay Kumar Rai, Company Secretary. We'll begin the call with opening remarks from the management, and then we can open the lines for Q&A. I now hand over the call to Mr. Surendra Kumar. Over to you, sir.
Yeah, good morning, all our investor friends. I'm sure you all must be delighted after seeing the third quarter results, and whatever faith you have posed in the company, so you will see that the results are basically coming. That should reaffirm your faith in the company's futures. Our total revenues have increased on a very, very positive note, a rise of around 67%. I'm talking about the standalone basis. And I will talk about the consolidation basis, then the revenues have increased by around 45%. So that is taking the FSNL as well as our JV company MMRPL together. Marketing for MSTC has temporarily increased from 97 crore to around 185 crore, but this is a temporary increase because of few obligations from the earlier entered contract. So now these marketing volumes will be comparatively lesser and lesser in times to come. But if we see the e-commerce, we have always been telling in all our investors, Concalls also, and every form that MSTC is primarily to e-commerce. So there our revenues have grown from 137 crore approximately to more than 205 crore. That's a growth of around more than 50%. So that's a quite healthy jump. Our profit before tax has increased from 67 crore to around 142 crore. That's a jump of almost more than double, under 12% jump. Profit after tax has taken jump of 156%. And if you see the provisions, our provisions also are decreasing. And whatever provisions are there, so those provisions will be basically, except very minor sum, most of the provisions will be over in the current financial year. So the next year you should be able to, we are expecting a better financials as compared to this in terms of the, not only the business, in terms of the profitability also. So another highlight is, our subsidiary company FSNL is also doing quite well. They are basically the supporting arm of our integrated steel plant. Because of the better volumes in the steel plant, FSNL, and of course certain operational efficiencies at their end, they are also doing good. So overall, the combined profit for the company, the combined revenues for the company are very, very robust. We have undertaken, apart from the spectrum auction, which we conducted the last year, this year perhaps the spectrum auction will not be there, but the next financial year spectrum auction again will get us good traction. Apart from that, some other agreements that we had done, they are gaining traction now. If you see the property auction of NPAs for public sector banks, last year the volumes were not that good. This year the volumes as well as the earnings are robust from that. So that is gaining traction now. And you must be seeing various ads in the newspaper wherein lot of NPAs under Sarfaroshi Act are being sold by banks. We are also exploring new business opportunities in various areas and trying to reduce our dependence on scrap sales. Although scrap is one big area with the emphasis on green steel these days, because the melting of scrap will always consume much less energy, much less natural resources. So that also is gaining traction. So of course MSTC, we hope to get benefit from that. Apart from that, property sale is one area where we are getting very good business. So with these few highlights, I'll hand over to our Director Commercial so that she can apprise you further.
Thank you, Bhumika. Good afternoon.
Sorry to interrupt. We are not able to hear you clearly.
Okay, is that better now?
Much better. Thank you.
Yeah. So, good afternoon to all of you. As our CMD had already highlighted, this has been a very good 9 months for us in terms of our performance in e-commerce. So, during the 9 months ending December 31st, the volume of around 1,053.28 billion in terms of value of goods transacted through the e-commerce and marketing verticals, which is about 110% increase over the same time last year. The revenues have increased by about 45%. It is now at 69.94 million in the first 9 months, and this was around 48 crores, 4,824 million in the 9 months of 2021. PBT is around 1676.39 million compared to 759.34 in 2021. Now, all this could be possible mainly because of certain key projects that we did and also certain inputs and the e-commerce activities in certain sectors. I'll just highlight briefly on those. We have done the 13th tranche of coal mine auctions, and this has around 88 coal mines have been projected. This is in an ongoing stage. Auctions are still going on. So the actual benefit of this as to how much Exchequer will gain and what will be the revenue to the company in the coming months. We have also conducted, sale of pond ash, which is actually a form of fly ash only for various plants of NTPC across the country. And now this has gained a good volume, and this is a sustainable business for the time being. So we have sold about 176 crores worth of pond ash, and we have earned about 1 crore or so as service income. We have entered into an agreement with the LIC Corporation for disposal of their various, materials that lie across various assets of LIC in the country. We have also done a very small pilot project for sale of unlisted shares for Andrew Yule and Company, which is a government company out here, and this was successfully sold in the first attempt itself. Now, many of the coal blocks that were allotted in recent times in the last few years have already started production, and many of those companies in the state government as well as private sector are utilizing our services for sale of such coal and iron ore also. So Odisha Coal and Power is one such company with whom we have entered into an agreement, and we will be conducting one event per month for sale of their mines coal. We are also in talks with other companies for sale of coal as well as iron ore. Kerala Forest Department has sold some sandalwood during this last quarter, and that has also gained some substantial revenue for the state. Major mineral blocks, 2 of them have been put to auction and successfully sold in the state of Karnataka. Some more are in the pipeline now. Apart from that, as CFD sir said, the NPAs of the banks are also being sold through our portal, and now the model has more or less stabilized, and the volumes are coming in now. One major factor because of which the revenue is quite appreciable is because of the increase in steel prices. That has actually ended up in increase in the scrap prices also. Also the iron ore, both in terms of volume as well as the prices, has substantially gained over last year, and because of that our revenue streams were really good, because that's on a percentage basis, the service income is on percentage basis. And the number of coal auctions that we are conducting, which again is a stable business for us, that has also increased in the last 9 months. So because of these factors contributing majorly to e-commerce, the revenues are quite good. And as already said, the marketing activities are slowly being closed down, especially the 2 models. And after probably this year, after the 4th quarter, there will not be much of activity in that segment. So we are fully committed to focusing on the e-commerce activities with newer products and business models. Thank you.
Good afternoon, everybody. So let us now discuss about the financials. So first of all, standalone financials for the 9 months comparison, what we are doing as compared to 2021 to 21-22. The total revenue has increased from 2445.31 million to 4092.39 million. That is a jump of around 67%, supported by EBITDA pre-provisioning from 1094.33 to 1697.92. That is a jump of around 55%. Provisioning has gone down from 348.41 to 217.86. So contributing to PBT. PBT has gone from 671.06 to 1425.11. It is a jump of around 112%. And PAT from 345.62 to 887.49, a jump of around 156.78%. And thereby EPS from 4.91 to 12.61. And cash profit jumping from 714.86 million to 1134.92. If we look at the segmental part, then we can see that revenue from e-commerce has grown from 1369.16 to 2056.65, a jump of around 50%. The breakup e-auction e-sale 1174.28 has grown to 1807.20. E-procurement has grown a little bit slight later, 74.10 to 43.50, and others from 120.78 to 205.95. Although revenue for marketing has gained little bit, but it's a one-time phenomena, and we are already, as discussed, we have already tapered it down. And with that, profit after tax has come up from 345.62 to 887.49. Now let us look at the consolidated result, that is result of the group as a whole. Here where the total revenue has grown up from 4824.98 to 6994.83, that is a jump of around 45%. And EBITDA has grown up from 1331.82 to 2109.24, that is a jump of around 58.37. Provisions, it is down by 28% from 360.17 to 256.98. Share of JV, where also JV has shown a positive side, and from red which has converted into black, that is loss of 12.46 to 0.67 profit. And with that, PBT comes to 759.34 to 167.39, a jump of 120%. And PAT has jumped 178% from 371.33 to 1031.57. And combined EPS again has jumped as a 178% from 5.27 to 14.65. And the cash profit has jumped from 874.76 to 1439.71. And that's total all from our side. Now, hand it over to you.
Should we open up for questions?
Yes.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Kasturi from Focus Capital. Please go ahead.
Am I audible?
Yes.
Yeah. First of all, congratulations on a fantastic quarter. Sir, I just wanted to understand the vehicle scrapping business. So, for example, what is the cost of setting up a center? How many vehicles can be scrapped in a year? And, have the government's vehicles started getting scrapped? And is this line of business working capital intensive? And what is the roles and responsibilities of MSTC and your JV partner? So whatever information you can share would be most helpful, sir. Thank you.
Yeah, you see, the investment as we envisage in this is quite heavy. As the government of India is laying great stress on vehicle scrappage. So what we believe is when the large number of vehicles come, then we will need a shredder that costs around something around 70-80 crores. So those that kind of costing will be there in these centers, but right now we are not incurring in that kind of cost because the number of vehicles that we are getting is comparatively much less. You see, the policy has recently been issued by the Government of India. The state governments have yet to notify their policies. So once the policies are notified and people get some sort of incentives and disincentives. I mean, as far as the disincentives are concerned, those are linked with the fitness centers which are likely to be coming by, let us say, end of 23 for one class of vehicles and end of 24 for FY24 for another class of vehicles. So what we believe is that the traction is yet to come, and the state governments are, whatever discussions we have, they are slightly reluctant in providing some sort of incentives. A center is pursuing with them. So it is going to take some time for the vehicles to come. The private vehicles also are not that large, and government vehicles also yet have not shown much of the traction in that. As far as we are getting, whatever the capacities we have set up, it is basically we are not able to utilize those kind of capacities as of now. So that is why presently we are not investing that heavily in these, in one center, but we are trying to open number of centers with less capital so that the business doesn't suffer much of the losses. That is why in 3-4 years we have got slightly, we are almost on break even now. This is just because of our slightly lesser cost in plant setup, which we have gained from our experience. Regarding your third question about the roles and responsibilities of both JV partners, here we have entered into a JV agreement with them where the roles are very clearly specified. But one thing is very clear here, that day-to-day operations and total, in fact, our second partner, Mahindra Interstate, they have got total basically freedom as far as the operations are concerned. There is no interference from any side regarding their operations, and most of the business decisions are being taken in the board meetings with complete consensus on both sides. So what we believe is what we have seen is just, I'll say, a small trigger, and when the full picture comes, that would be a good business for us and also a good sense for the country also to get the scrap as much as possible, put off the old vehicles off the road for helping improve the environment also. Yeah, thank you.
Sir, follow-up question. So can we understand that the operations, day-to-day operations, would be taken care by Mahindra for all the centers? Is that the understanding, sir?
Yeah, all the centers.
Okay. And if I may ask another question, sir, in the e-commerce side of business, are you seeing any impact of the talent attrition, sir? Thank you.
Yeah, I mean, we are seeing something, but not that large as in private IT companies are there. We are seeing some attrition, but not that significant. I mean, it's not so significant to impact our business or operations.
Thank you, sir. I'll come back in the queue.
Okay, thank you. Next, please.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yeah.
Yeah. So congratulations on a good number. My first question in the e-commerce segment. So you mentioned that the scrap prices were good, and also in other than the scrap, in iron ore also we have a percentage of sales as a service income. So can you elaborate what percentage of revenue comes as a percentage of revenue, and what percentage of e-commerce revenue is a fixed price revenue?
Actually, the revenue model for each product or each service is defined by the roles and responsibilities that MSTC has to undertake. So if it is a very complex kind of a portal, then there are some fixed charges as well as percentage charges. But if it is a very routine kind of a thing, as in the case of iron ore, that's why I mentioned iron ore, it's a percentage because it's a very normal kind of very stable model which has been there for almost 8-10 years now. So it is very difficult to say that which product has which kind of revenue model. It is a combination of both.
Yeah, but let's say in current quarter our revenue from e-commerce is around 80 crore. So is it fair to assume that more around 50-60% of revenue would be percentage of revenue, and the balance would be fixed price?
See, as I said,
a broad percentage number will be fine.
See, if you see sub-segment of e-commerce, scrap and iron ore will be on percentage basis, but the rest of it is a combination. So it is very difficult to estimate the percentage like that.
Okay, and how much would be scrap and iron ore of the total revenue?
Scrap is about 40-50% is our total earning. And iron ore, as I said, the last 9 months were very, very good, and that's why it has seen quite an impressive performance. But that may not be the factor every year. This year, that has been the major factor. Okay.
Okay. My second question is, now this last quarter in Q2, we have mentioned that the risky receivables, which you used to mention around 100 crore, has come down to 25-30 crore. So how much it would be now?
Can you repeat your question?
So in Q2 call, you have mentioned that the risky receivables from the marketing segment was around 25-30 crore only. So has it come down further?
Yeah, it has come down substantially. Now what we are left with is just about 13 to 15 crores, which will be provided for in the last quarter.
Okay, so from next year onwards, whatever receivable would be there would be either e-commerce or in marketing, it would be 100% BG back, right?
Yes, that's true.
Okay. And this quarter, in standalone operation, we have around 11 crore of other income. So is there any one-off or it's a normal treasury income?
Basically, let me answer you. Basically, the other incomes are generally not as standardized type of thing. It keeps on fluctuating, but we hope that this type of revenues will keep on going. But of course, it may fluctuate. It is not part of our operating income.
Okay, but this quarter in 11 crore, it's mainly interest on our treasury, or is there any one-off?
Pardon?
This quarter, the other income was 11 crore. So it's mainly the interest income on our cash book, cash balance, or is there any one-off income in this?
Basically, it's a mix of all. Basically, we have certain dividend income also, certain treasury income also. It's a mixed bag. That much I can say.
Okay, and last question from my side. Any update on sale of FSNL?
So, the Government of India has already in a consult decision, and in that particular EGM, we have taken a consent of the shareholder also. You all are aware. We have given this to the stock exchange also. So the process is now triggered in, and it is on the track. So as and when the new processes and all these things are happening, we will let you know through our bulletin in the share the BSE section. So we will let you know.
Okay.
All day.
Okay, that's it from my side. Thanks.
Okay, thank you.
Thank you. The next question is from the line of Manbadhar Bed from Laurel Investment Advisors. Please go ahead.
Good afternoon, sir. Congratulations on a good set of numbers. So just wanted to understand on the e-commerce side, since we are into multiple domains on the e-commerce side, so could you give us a breakup into which segment contributes how much in terms of revenue to us? And sort of maybe even if you could give a breakup of the segments which you see sustainable and which are kind of, maybe a one-time kind of an income. So that will help us understand this business a little better.
In e-commerce, basically we have a scrap sale, which has been our forte traditionally. We are also into e-sale of coal, iron ore, and a lot of other products like the blocks, assets, forest produce, a lot of minerals, etc. And we also have a very customized e-procurement portal, which has not gained much traction because of the presence of GEM. As far as scrap business is concerned, I have been saying repeatedly, the income is about 40 to 50% total revenue of e-commerce. Out of that, about 40 to 50% is from scrap sale. Then about 20-25% is from e-sale, but this again is a combination of fixed price sale as well as percentage basis. As I said, this depends on what kind of service we are giving. And e-procurement, we do not envisage a big growth in that area. So as far as scrap is concerned, this again is linked to the steel sector. If the steel prices go up, the scrap prices also go up. And since it is a percentage basis, then because of that, the revenue will also be good. Now, iron ore and coal are such things that, the market forces decide as to how they will perform. And regarding our customized portals or other minerals and all, again, it depends on the market economics. So the basic breakup is 40 to 50% from scrap, about 20 to 25% from e-sale and the rest from other revenue streams. This is the breakup, and we are now focusing more on this e-sale business because properties has gained some traction now, fly ash properties, and a lot of raw materials we are selling. And earlier, some of the raw materials of private sector was being sold directly by them, but now they are also seeing some value in our services, and increasingly they are utilizing our services. So maybe in coming years, the e-sale segment will go up.
Fair enough. This bit that you mentioned, the private sector seeing value in the services that MSTC provides, can you sort of elaborate this a little more so that we can understand what is it that MSTC brings to the table?
Jindal Steel is one such company who has utilized our services for sale of iron ore. We are in talks with certain Tata Group companies also. And a lot of people who have taken iron ore and coal blocks and other mineral blocks have approached us. But we are still in talks, and so I cannot reveal more names now.
No, so
Jindal is one such company who has reposed faith in us.
So, ma'am, not looking at names at all, what I want to understand is that what is the USP that MSTC offers to a private player?
The largest buyer base and a very transparent system. It's very user-friendly and very transparent system, which people see to be good for their business, for their sale, and for sustained, sale of materials, raw materials. Buyers also see that, it's quite easy for them to buy material through our portal.
You see, I'll supplement what Madam has said. You see, whenever principal comes to us for selling this product, he's sure that he will get the best prices, right? When a buyer comes to us, he's assured that the products that our platform is offering, so he will have the large quantities all over India, wherever the iron ore, scrap, properties, whatever is available, he will find. So we have basically a crucial mix of buyer and seller. Apart from that, as Madam has said, is the user-friendly interfaces for the buyer as well as seller. And another thing that find assurance with especially the government sector is the complete transparent process and quite robust systems. So we are keeping the security of the system in quite high. We are high security for the system, so that our systems are safe and nothing. Adverse kind of comments have. Even the courts and at all the forms, our portals have stood every kind of scrutiny from the CAG, from all agencies, even the courts, wherever some cases, some bidders have gone against in the court, or some region or other. So the courts have also reposed faith in the MSTC system. So it gives a comfort to buyer as well as seller, and the best price for both of them. That is one USP of the MSTC. That is why the people are coming to us. Yeah, thank you.
All right. And so one last question from my end. So can you give us an update on the agriculture side? Javik is a platform that we have. How is that doing, and what do you see the future for that particular?
Javik Kheti, the challenges are still there, especially in terms of logistics and connecting to the farmers as such. We are still working on that, and Ministry of Agriculture has also put in a lot of efforts on this area. We're trying to onboard more logistic service providers, and once they are in place, maybe it will gain some traction and we will be able to transact some volume. But as of now, it is not much.
Okay. Fair enough, ma'am. Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Harshad Jain from Ra Investment and Advisory. Please go ahead.
Hi, congratulations to the whole team for such a fantastic set of numbers. Coming back to the previous question from previous participant, I just want to know that, as you mentioned that your e-commerce business consists of 40 to 50% share from scrap market. So if the steel prices and if the scrap prices go down, so do we expect a degrowth in revenues for e-commerce?
No, it doesn't actually mean that there will be a degrowth because the volumes, the amount of scrap that is being generated, that is still there and that is going up. So even if there is a small fluctuation, the volumes will make up for it.
Okay, so are we doing anything else apart from scrap to increase the market share from other segments?
Yes, actually in scrap itself, we are trying to rope in as many private sector big companies as possible. And newer models of business are also being seen as to, if we can bring in more aggregators for the scrap business as such. Maybe we will be able to, if not grow the business by leaps and bounds, at least sustain the levels that we are in.
Okay, so since we have grown 25% from quarter on quarter on the e-commerce front, so can we expect 80 CR plus quarterly e-commerce revenue going forward for the next financial year?
Actually, that will be difficult to say because this last quarter, as I mentioned, has been the main contributor has been iron ore sale, which was very, very good both in terms of volume as well as in terms of prices. So now that has slightly dropped and stabilized. So I'm not too sure whether so much iron ore will be mined and will be put up for auction. So it depends on the iron ore mining companies and the prices, what will be the prices in the next year. So it's very difficult to say at this stage.
But we have other things lined up as well, such as NPA auction and NME auction.
They are there. The NPA auctions are there. The coal auctions are there, and other minerals also. And more and more, private players are coming for sale of their minerals. So those things are there, but it will be difficult to say whether it is going to be 83 crores or 100 crores or 50 crores. What I can say is the business is sustainable, the models are sustainable, but the volumes, the market forces will decide.
Okay, and one more question would be regarding the dividend payout. So this quarter we paid a dividend of 6.5 rupees, which translates to almost 43 to 45 CR, which is almost like 100% of our profits for current quarter. So can you throw some light that why there is such a huge jump in dividend payout ratio, and will this be a new norm going forward?
There was a long after we got listed. The first year there was no dividend at all, if you can remember, and our management and the board felt they felt that the investors should be rewarded, and they have showed reposed faith and confidence in our company. So as an endeavor to that particular thing, and it has been thought by the management. So let us have some kind of reward for our investors who have shown such a keen interest in our company. That's the philosophy working behind that. So that we are hopeful, because the results are very good. So that is also the driving force for such a high dividend.
So what will be the dividend payout ratio for maybe financial year 23?
You see, that cannot be presented as of now, but I will say one thing, and in supplement to what our DF has said is, the model of business is such that the investments required is not that large, right?
Yes.
Most of the investments that we are making is in our JV company, right? So we'll always, having enough surpluses so that to reward the shareholders. So that is what we We expect as on date.
Okay.
I think I have replied your queries, sir.
Yes. Thank you so much. And one last question would be, can you provide some insight on cash on books at the end of December 31st?
Yeah, because December, as per the SEBI guidelines, we have only drawn up our PLs and all these things. So we have to wait till the March result. But that much we can say that from our company side, we are better placed, and you can see from that cash profit that we have shown you that there is enough sustainable cash for the company as of now.
Okay, and one last question would be, can we expect some kind of big revenue for next financial year from scrappers thing?
So as you see that in the Concall results, that already the company has come up from the red to black. It has shown profit. So, but that will of course any payout from their side will depend upon how much investment is required.
No. I was asking that how much centers can we expect by end of next financial year, and how much revenue do we expect, like probably 500 CR, 1000 CR?
So I think we are trying to expand pan India, and we were just waiting for the response of the government policy. As earlier in this Concall, our CMD has already highlighted, the state governments are yet to come up with their corresponding guidelines in this regard. So as and when this is coming up, we will be doing, but we are ready. We are poised for pan-India growth, and we can have, at the back end, we can immediately go for this expansion. So we are ready for that. That much we can tell from our side.
Okay, thank you so much, and all the very best for future.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to the management for the closing comments. Ladies and gentlemen, the line for the management has got disconnected. Please stay connected while we reconnect the management. Ladies and gentlemen, thank you for patiently holding. We now have the line for the management reconnected. Over to you, sir.
Yeah. Basically, I was saying that the investors have kept faith in us. We are working very hard, and all our employees are working very hard to provide best services to all stakeholders in our portal, our e-commerce services. And we hope to further better our results in the coming times. And the faith that investors have kept in our company, we want to give them good return. Thank you.
Thank you. Ladies and gentlemen, on behalf of Equirus Securities Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.